Hello, it's Lawanda, your CPA, on the line with you again to give you some practical finance tips for small businesses. Today, I'm going to go over 5 common business deductions that small businesses tend to forget when they're filing their taxes. The first one I'm going to offer is home office deduction. You can deduct mortgage interest, rent, utilities, repairs on your home if you do business inside your home. Now, that's going to be a percentage of the total square footage that you use for the business over the total square footage of the place that you live. If you are working with less than 300 square feet, you probably would use the simplified method. And if you're using the regular, which is over 300 square feet, then it would be the actual square footage that you're using. In the simplified method, you're doing $5 times the square footage of the uses that the square footage you're using in your home. The second one I'm going to offer to you are tax preparation fees. Any fee that you pay to pay for taxes current year, past year, and the year that you pay it, you can deduct it. Another one I'm going to give you is cost of goods sold. If you create products, like if you're making artsy items or you're making shoes or creating makeup, or if you're buying products and reselling them, like you're buying hats and reselling them or buying tennis shoes and reselling them, you can deduct the total cost that you paid for those items in the year that you're doing your taxes. And what you do is you have to make sure that you keep good records so you know how much inventory you have on record at the end of the year. You want to keep good financial records anyway, but this is just another reason why you want to, because it will allow you to see how much you purchased in the year, how much you still have at the end of the year, and what you actually sold or maybe had returned during the year. Another one I'm going to give you is startup costs and organizational costs. That's up to $10,000 worth of expenses you can write off in 1 year. Startup costs are the type of costs you use to set up your business, like you're building a website. You need to host that website. You have to buy equipment. You have to lease a space. Whatever the expenses are directly related to your business, you can write those off. Organizational costs would mean if you had to get an attorney to file your incorporation papers, or if you had to fill out any kind of market research, those type of things fall into organizational costs. So that is fully deducted on your tax return for the year that you are, we're speaking of that you're filing your taxes. The last one I'm gonna give you today are bank fees. Any bank fee you pay related in your business account related to your expenses. That's the maintenance fees, that are the ACH if you're doing wires, overdraft fees, write-off fees. Those fees can be deducted against your taxes. So I just wanted to stop in and let you know that, so to make sure that you're on track and getting and thinking about these things, because we're in September and pretty soon that tax year is going to roll around. And for those who make estimated tax payments, the next payment is due on September the 15th. Make sure you keep track of that, because that also reduces your tax liability, just paying it in advance. Take care, have a wonderful day, and make sure you check out IRS.gov, because they have all the resources you need to know about the publications, the instructions, and the forms to understand better what these tax deductions mean to you. Definitely speak to your CPA. If you don't have one, you can call me. Thank you. Take care. This is Lawanda, your CPA. Have a wonderful day. Bye.